I made 108,000 in the past month, trading live every single day in front of thousands. And no, I didn't do it with dragonfly dojis or graveyard candlesticks or any indicators. These trading patterns are designed to trap you so you fail at trading these markets permanently. Those get you fixed on staring the charts all day, just waiting for a singular candlestick pattern to form, only for your trade to get stopped out in minutes. It is literally impossible to trade with these concepts like this because there's no logic or framework behind it. What I use and what I believe is the most important concept that has helped me change my trading forever to achieve these results is liquidity. In today's video, I'll explain to you the 3 most important liquidity secrets that, when combined, made me a consistent and profitable trader, and then I'll show you the trades that I took in real time to help you solidify these concepts. Now, if you don't know who I am, my name is Nick, and I've been live trading in front of thousands daily for over 2 years now, and I've absolutely nothing to sell you. I share my analysis and setups in real time, so if you want them, click the link below. In simple terms, liquidity refers to the presence of stop loss orders in the markets. These are typically found in order of importance at session highs and lows, higher time frame candle wicks, and relative equal highs and lows. First up, session liquidity. Sessions are time windows in the market where trading volume is at its highest. The session timing I'm referring to are the respective kill zones. The timings will all be referencing the EST or the New York time zone. If you need to convert the timings, just search for the converted time on Google. The timings are as follows. Asian kill zone, 8 AM to 12 AM EST. London kill zone, 2 to 5 AM EST. New York AM kill zone, 9:30 AM to 12 noon EST. New York lunchtime, 12 noon to 1 PM EST. The New York PM kill zone, from the 1 PM to the 4 PM EST. Why these specific kill zones are essential to understanding liquidity is because trading volume during these smaller time windows within larger trading sessions is at its peak. This means that there are large numbers of market orders during these specific times in the market. And what do more orders mean? You guessed it, more liquidity. So at these specific kill zones, high and lows, there are stop loss orders resting above and below them, making them key points of interest for our liquidity-based trading strategy that I will share later in this video. Next, higher time frame candle wicks. You're probably wondering, well, Nick, what exactly is a higher time frame wick to you? Again, no fluff, no BS. I'll keep it very simple. Higher time frame candle wicks in this case refers to monthly, weekly, daily, 4-hour and the 1-hour candles. Nothing more, nothing less. This means that you go to the monthly, weekly, daily, 4-hour and the 1-hour time frames to mark out these respective previous candles high and lows. Those are your key liquidity pools. Lastly, relative equal highs and lows. I mostly look out for these on the 15-minute chart. The reason for the liquidity at these places is that retail traders who trade based on support and resistance logic will see these as equal highs and lows, as buying and selling opportunities. So, where would their stop losses be placed? Just right above the equal highs and right below the equal lows. Basically, if you play your cards right, they become our liquidity. The reason why liquidity-based strategies work so damn well in this market is because you are literally using other traders' stop losses to fuel your own trades. When other traders' stop losses are taken at key liquidity pools, this is what we call a liquidity sweep. In other words, it basically means when price wicks a key area of liquidity. We have gone over what exactly liquidity is, so we'll now move on to the second liquidity secret, liquidity pairings. In simple terms, the definition of liquidity pairing is when we sweep one side of liquidity, we expect price to move to the opposing side of liquidity. For example, if we sweep the London low, we expect to target the London high. If we sweep the previous 4-hour candles high, we expect to target the previous 4-hour candles low. Using this logic, you can frame 2 things. Number 1, your point of interest. Number 2, your final target. The point of interest will be at any one of these liquidity pools, and your final target will be at the opposing end of these liquidity pools. Understanding this basically covers 80% of the liquidity-based strategy already. Yes, It's really that simple. Lastly, let's go through liquidity sweep secret number 3. How to confirm a liquidity sweep. Time frame alignment here is absolutely crucial. I see so many traders get stopped out only for the trade to run in their direction, simply because they do not know how to align time frames correctly. I'll give you a rough guideline on how to align these time frames. If you use the monthly liquidity, use 4-hour confirmation. You use weekly liquidity, use 1-hour confirmation. Daily liquidity, 15-minute confirmation. 4-hour liquidity, 15, 5, or the 3-minute confirmation. 1-hour liquidity, 5, 3, or the 1-minute confirmation. And if you use session liquidity, you use the 5 or the 1-minute confirmation. Now, this confirmation you're looking for is a simple change of character. If you're new to market structure, a change of character, or chalk for short, is a sign of a potential trend reversal. So, for a bullish change of character, what you look for is a recent lower high being taken out, with price setting in a new higher high. Similarly, for a bearish change of character, you look for a recent higher low to be taken out, with price setting in a new lower low. That's all you need for this specific strategy. But if you want to dive deeper into market structure, click on this video to find out more. Now, I'm going to reveal my 89.1% win rate liquidity strategy that has netted me and my members hundreds of thousands of dollars. And yes, it is way simpler than you think. At its core, this strategy has only 3 key steps. Step 1, wait for a key liquidity pool to be tapped. Step 2, go to the lower time frames to confirm the liquidity sweep using time frame alignment I just shared earlier on. Number 3, enter on a retest or confirmation of the chalk. Wait, that's it? You mean you don't have 20 different indicators and have charts up on 10 different screens? Yes, that's it. Alright. I'll admit, I will use one indicator that marks out the kill zones for you. This is purely for convenience sake, so I don't have to keep marking out these kill zones myself. Just go to Trading View, click on Indicators, and search ICT kill zone plus pivots, bracket, TFO, close bracket. Then, change your setting to these. After copying these settings, your chart will look something like this. The blue lines mark out your Asian kill zone highs and lows. The red line marks out your London kill zone highs and lows. And the green line marks out your New York session highs and lows. These indicators make it super easy to identify key session liquidity pools for you to frame your session liquidity trades. With that, let's talk about the bullish and bearish trade framings. For bullish trades, we want to see a sweep of a low to target a high. Similarly, for bearish trades, it's the opposite. We want to see a sweep of a high to target the low. Notice how we're using secret number 2 of liquidity pairings here. So, let's go through a rough outline of a bullish trade. Step 1 is to look for a low to be swept. For a quick refresher, this can be previous X low or a session liquidity low. Step 2 is to look for a bullish change of character on the lower time frames. When I say lower time frames, I'm mostly referring to the 1, 3, and the 5-minute time frames. I'll discuss this in more details when we go through the actual trade examples. The reason why a bullish change character has to happen for us to capitalize on bullish trades is that when price comes to sweep a low of liquidity pool, it creates a lower time frame bearish structure, as you can see right here. So to confirm a sweep, we need the most recent lower high to be broken through with a body candle close. This shows that price intentions to reverse is very strong and to continue to push up after sweeping liquidity. Finally, all that's left is to look for price action here to give us a retest of the bullish change of character level. That's your entry trigger. Your stop loss will be at the most recent swing low, targeting the opposing liquidity. For a bearish trade, just take exactly what I said and flip it. Step 1 is to look for a high to be swept. This can be the previous X high or session liquidity high. Step 2 is to look for a bearish change of character on the lower time frame, which is where the most recent high low is closed below, setting in a new lower low instead. This confirms the sweep. Step 3, look for a retest of a bearish change of character. With stops above the most recent swing high that has just been created, and target the opposing end of liquidity. With these rough examples out of the way, let's get into actual trade examples and how you can use this strategy effectively on the charts. First things first, my absolute favorite pair to use this strategy on is on XAUUSD or gold. Gold is just a lot more volatile and tends to respect these key liquidity pools better than most other pairs, and has given me the best results overall. It has given me great opportunities during the Asian, London, and the New York sessions, basically throughout the entire day. Let's start off with the very first example. This is the 1 hour time frame on XAUUSD. As you can see, our previous hour candle high has been raided or swept. Step 1 is done. Step 2 is to drop to the lower time frames using our time frame alignment. Since we swept a 1 hour high, we drop down to the 1 minute time frame to look for a bearish change character to confirm the sweep. We get that right here. So that confirms that we have swept liquidity. Now all that's left to do is step 3. Entering of the retest of the change of character. We retest the change of character here, and that's our entry. For our stop loss, we place it in the swing high of the change of character level here. For our take profit, remember what I said about liquidity pairings? Since we have swept the 1 hour high, we target the 1 hour low. Right here is our final TP. Let's see what happens. Price retests the change of character level and starts dumping towards the full take profit. Now, transparently, after seeing such bearish momentum, I got a little bit greedy and decided to extend my TP a little further. Now, what can I say? I'm human too. Price dug even further down, but proceeded to full on reverse and stop me out at break even. Still, it still netted me 3,000 plus US dollars as I took partials along the way. Now with that, let's move on to our next trade example. This again is the 1 hour time frame on gold. Similar to our last trade, the previous hour high has been raided. Furthermore, there's also an additional confluence that supports our trade. We also have a bearish fair value gap on the 1 hour time frame. For those of you guys here that are completely foreign to this concept, a FVG is basically a gap between 3 candles. Think about it as a support and resistance zone. If you want to dive deeper into this topic of a fair value gap, then watch this video here, right after you're done with this one. So just to recap, we have swept the previous hour highs liquidity and tapped into a fair value gap as a resistance zone. These are very strong confluence to start a sell-off. Step 1 is done. Step 2 is to drop to the lower time frames using our time frame alignment. Since we swept a 1 hour high, we drop down to the 1 minute time frame to look for a bearish change of character to confirm the sweep. We get that right here. So that confirms that we have swept liquidity. Now all that's left to do is step 3. Entering of the retest of the change of character. We retest the change of character here, and that's our entry. For our stop loss, we place it at the swing high of the change of character. Now, our take profit, we can use liquidity pairings yet again. Since we swept the 1 hour high, we target the 1 hour low right here. This right here is going to be our final TP. Now, let's see what happens. Price messes around for a little bit near our entry and then finally dumps to our full take profit. Now, since we have gone over 2 higher time frame candle wick trades, let's move on to our next trade examples, which will cover session liquidity. This is the 15-minute time frame on gold. Our indicator has very nicely marked out our New York PM highs and lows with this orange line. Now, as you can see, our New York afternoon session low has been raided. Now, I hate sounding like a broken recorder, but I really want to drill the points into your heads. So let's think back to the strategy steps. Step 1. What do? Look for price to sweep a high or a low. Since we raided the New York PM's low over here, our attention is turned to the bullish trade ideas. Step 2 is to drop to the lower time frame to look for a bullish change of character. Again, time frame alignment. Since it is a session liquidity rate, we can use the 1 minute time frame to look for confirmations. Last but not least, step 3, entering of the change of character level. This is our entry right here. We place our stop loss at the swing low of the change of character. For our take profit, we again refer to our liquidity pairings. Since we swept the New York PM session low, we can look to target the New York PM session high. Something that you will notice here though, is that we have already taken out the NY PM session high shortly after the session ended. In such cases, we can look for other session liquidity pools to target. Right here, you can see that the previous London high is left untouched, and therefore we can look to target that instead. That is our full take profit. Now let's see what happens. Price retests and immediately starts to skyrocket. Full TP smashed. Now let's go to our last and final example, because I really want to make sure each and every single one of you can use this strategy to extract money from these markets for yourselves. Now this is the 4-hour time frame on gold. Our previous 4-hour candle low has been raided. Let's mark out the 4-hour candle's high. This is step 1 done. Let's move on to step 2, our time frame alignment. Since we have set the 4-hour liquidity pool, we can utilize either the 3, 5, or the 15-minute time frame for our confirmation. Let's drop down to the 3-minute chart here to look for our bullish change of character. We have consolidated in this region for quite a while before price finally gives us our bullish change of character. That is going to be our sign to enter. Our stop loss, as per usual, goes towards the change of character low. And our target can be determined once again by using liquidity pairing. Since we have taken out the 4-hour low rate, good. Look to target the 4-hour high. So let's see what price action here does. Taps our change of character level and starts printing towards the upside, smashing our full take profit, this time for $7,794 US. That's it. This is my liquidity secrets review. I genuinely hope that this was worth the attention you paid. If you've gained or learned anything from this video, consider liking it and subscribing to this channel to get notified when I take these trades live. Now, as I said, if you want to dive deeper into the nitty-gritty details of this strategy, you should be looking at market structure. So if you really want to level up, click on this video right here to increase your accuracy of your liquidity sweep strategy. With that, I'll see you in the next one.